All right, so the precision technology company Nordson just wrapped up a fiscal year that was, well, record-breaking. Today we're going to unpack those results, go beyond the big headlines, and really see what's powering their growth engine. Let's dive in.
So let's start at the very top. The president and CEO, Sundaram Nagarajan, calls it a strong operational finish. Right off the bat, he's crediting his teams, which is always a good sign. But of course, the big question is, do the numbers actually back up that positive sentiment?
So how good was the year, really? Well, the headline here is pretty clear. They didn't just have a good year, they literally set new company records. Let's take a look at the two biggest numbers that tell this story.
First up, sales. They hit a new record, pulling in $2.8 billion for the year. That's a solid 4% jump from 2024. But, top-line revenue is only half the story. The real question is, how much of that actually turned into profit?
And to answer that, we've got to look at something called adjusted earnings per share, or EPS. This metric is super useful because it strips out any weird one-time costs, say from an acquisition or something. And that gives us a much cleaner picture of how healthy and profitable the core business really is.
And here's where you can see it all come together. Look at this. Sales hit that record $2.8 billion, and right alongside it, adjusted EPS also set a new high of $10.24. That's a 5% jump. So the big takeaway here, it's not just that they were selling more. They were actually getting more profitable on every single one of those sales. That's huge.
Okay, so where do these record numbers actually come from? To figure that out, we need to pop the hood on Nordson's business engine and see which parts were really firing on all cylinders.
Think of the company kind of like a three-cylinder engine. Each part serves a totally different global market. And understanding how each one of these segments performed is the key to seeing the full picture. So, let's meet them. First up, you've got the Industrial Precision Solutions segment. This is the part of Nordson that makes all that super precise dispensing equipment. Think things like consumer product packaging or those complex assembly lines. Second, there's their Medical and Fluid Solutions segment. This division is all about making absolutely critical components for the healthcare industry. We're talking parts used in life-saving medical procedures and fluid management systems. Really important stuff.
And third, we have Advanced Technology Solutions. As the name suggests, this segment serves the high-tech world, providing the systems needed to manufacture complex electronics and, of course, semiconductors.
Now, this is where the story gets really interesting. In the final quarter of the year, these segments did not perform equally, not at all. Industrial and advanced technology sales actually dipped a little bit. But the Medical and Fluid Solutions segment, whoa, it surged, posting a 10% jump in sales. So yeah, that powerful performance from the medical division was the true engine of growth here. It didn't just do well, it completely canceled out the slight weakness in the other two areas and ended up pushing the entire company to that record finish. It was the star of the show, no question. Okay, sales and performance are one thing, but a company's long-term health, that's all about how it manages its cash and its debt. So let's do a quick financial health check on Nordson. To do that, we're going to start with a metric called free cash flow. The easiest way to think about this is like the company's take-home pay. It's the actual cash left in the bank after all the bills are paid and all the investments in equipment are made. It's a fantastic indicator of financial strength and flexibility. And in 2025, Nordson generated a record-smashing $661 million in free cash flow. I mean, that is a massive number. It represents a 136% conversion of their net income into actual cash. That just screams fantastic operational efficiency. So, the big question, what did they do with all that cash? Well, they played it really smart with a very balanced strategy. A huge chunk went right back to shareholders, over $300 million in share buybacks and almost $180 million in dividends. But at the same time, they used over $224 million to pay down debt. And paying down that debt had a real measurable impact. Their net debt leverage ratio, which is basically just a measure of debt compared to earnings, it dropped significantly. They went from 2.5 times earnings all the way down to just 2.1. That strengthens their balance sheet and puts them in a super solid financial position for the future. A record year is great, but you know how it is. Investors always want to know, what's next? So what does all this mean for the future? Let's take a look at Nordson's own forecast for fiscal year 2026. Well, the company is predicting another year of really solid growth. They're forecasting sales to go up by another 1 to 6%, and even more impressively, they expect adjusted earnings per share to grow by 6 to 12%. What that tells you is they think profitability is going to grow even faster than their sales. That's confidence.
And this confidence isn't just wishful thinking. It's grounded in their corporate ascend strategy. It's built on 3 main ideas: a growth framework they call MBS Next, an owner mindset to empower their teams, and a big focus on talent through their Winning Teams initiative.
And you can really hear that optimism in the CEO's own words. He points to key markets that are beginning to inflect, turn a corner. That's why the company feels so good about hitting its growth forecast for the year ahead.
And all that really leaves us with one final thought. Nordson proved its resilience and its growth potential with a record-breaking 2025 and a really clear strategy. The big question now is whether its diverse portfolio of precision technology is well-positioned to keep on winning in what is a constantly evolving global market. We'll definitely be watching.